Good afternoon, ladies and gentlemen, and welcome to our seminar entitled A Radical Shift, Risk and Resilience in the UK SMEs. We have all heard the cliche of the SME sector being the backbone of the economy. And with 4.8 million businesses in the UK and 99% of them being small to medium-sized enterprises, there is no doubt that this is an extremely important sector for both brokers and insurers. So it was perhaps no surprise when Zurich commissioned a report undertaken by the Economist Intelligence Unit to look at how the recession and a stagnant economy has affected SMEs, and more importantly, the risk implications going forward. After our presentation today, we will have time for questions. So could I now invite Richard Coleman, Director of SME at Zurich, and Monica Woodley, Managing Editor of the Economist Intelligence Unit, onto the stage. Thank you.
Thank you. So, welcome and thank you for choosing to spend some of your time with us at BIBA. Thank you particularly for those that have turned up. We had about 300 registered for this event, so thank you very much for the 30 that have weaved your way through the bars. I knew it was a mistake for us to open the Zurich bar at 3 o'clock. That's where everybody is. Nonetheless, hopefully I think you'll find this an interesting session, and hopefully we'll still drive a bit of engaging debate and some insights into SMEs' changing attitudes to risk. That does lead me neatly on to why we've sponsored this research with The Economist. Zurich Commercial are probably most well known as a very strong mid-market and corporate insurer, but we're actually a very, very large SME insurer as well. Albeit relative to that strength in mid-market, we're underweight in SME. So SME is an area that we're looking to strongly grow over the course of the next few years. And when we stepped back and considered how we wanted to grow in SME, we made the strategic decision that we're going to go to SMEs only through brokers. Our reasoning for this is very simple. We truly believe in the value of advice for this sector. Our postulation through this research and through others that you'll see later during the year is that the adaptations that SMEs are making through this current economic crisis, and particularly through technology change, means they're becoming more complex, not less. So their need for advice has never been stronger. So part of our commitment, therefore, is to be continuing to share some of this insight with you over the coming weeks, months, and years, both so you can target customers more effectively, but also so we can add the greatest range of insights to your own direction of your business. So this isn't a one-off. This is report 1 of 3 with The Economist. The first 2 are available on our website. We'll be sending those out through our insider email communication as well. And then we're going to start drilling down from the macro trends we're going to talk about today into deeper risk and insurance insight through each of the 3 reports. Also, throughout the next year, look out for our quarterly risk index. We publish that quarterly through YouGov, and that shows the evolving insights that we see running through SMEs and their attitude to risk. Later in the year as well, we're going to work with Centre for Cities, where we're going to delve deeper into risk and how it affects particular regions through 20 major cities in the UK. So if you want to carry on the debate after this, come and talk to us on the Zurich stand. Happy to talk about Zurich SME. We'll be back for the Q&A, as Steve mentioned shortly. But in the meantime, I'll introduce Monica, Managing Editor at The Economist. Thank
you. Thanks, Richard. As Steve already mentioned earlier, there's a very good reason why UK's SMEs are vital to the UK and why Zurich has commissioned this research. Zurich approached us last summer to investigate the challenges facing UK small businesses. And together we identified 3 areas of research: the economy, technology, and changing demographics. And today we're going to focus on the first of those challenges, the economic challenges, and really look at how SMEs are adapting to these challenges and what perhaps new risks are being brought in by the changes that they are making. So, as Steve mentioned earlier, SMEs are seen as hopefully the engine of growth that's going to bring us back out of the current economic stagnation. 4.8 million businesses, 90% of them are SMEs, even 96% are micro businesses, so those with 0 to 9 employees. And they are vital to the UK economy. SMEs accounted for 59% of all employment last year and 49% of turnover. Even if you drill down to just those micro businesses, they account for 32% of employment and 20% of turnover. And the government really has been pushing this idea that SMEs are the ones that are going to drive growth, and a lot of pressure placed there, but perhaps not the same kind of attention to detail of how are they supposed to do this. So I think today what we'd like to do is talk about how businesses are changing, and hopefully show some bright signs for the future. Unfortunately, I've got to start off with the kind of not so positive part, which is the current economic situation. At the Economist Intelligence Unit, we believe that in the UK, the economy is really, the underlying structures remain fragile. We're worried about the process of balance sheet readjustment with the government, and at the same time that we have concerns about the European Union, long-established trade and financial links there, and obviously everything that happens in Europe affects the UK as well. Last month we saw the IMF talk about their concerns downgrading the economy. Fitch joined S&P in downgrading the UK's credit rating. So some not so positive signs, even though we did, in fact, avoid a triple-dip recession. So I think the overall picture we still see is very shaky. It's going to be a while before we really return to the kind of growth that we've become used to. We're predicting growth of just we had growth of just 1% in 2011 and 0.3% in 2012. And we're forecasting this year just 0.5% GDP growth, and then an average of kind of 1% over 2014 to 2017. So we've got a long road ahead of us where it's going to be fairly stagnant, and so quite a long period for SMEs that they need to learn how to adapt in this new environment. Now, the basis of this research is a large survey of UK SME owners and directors. Here you can see some of the survey demographics in terms of location, the number of employees. You can see the majority of them were either sole traders or other micro businesses. And we've got our revenue size there as well, also showing the bulk of it really was very, very small businesses. Now, in addition to that survey, we conducted in-depth interviews with SME experts, such as Mike Cherry, the National Policy Chairman at the Federation of Small Businesses, and Professor Stephen Roper, who is the Director of the Enterprise Research Centre at the University of Warwick. And these are the key findings of our survey. What we found is that in the past 5 years of economic stagnation and volatility, it's really forced UK SMEs to undertake the most significant adaptation and shift in management behavior that we've seen in decades. SMEs have become stronger through diversification and deleveraging. They've had a lot of operational change, but as I'll go into a little bit later, this has brought in some potential new risk exposures that we all need to be aware of. They have become more operationally resilient and better prepared to manage the economic challenges. But at the same time, it's again, a bit of a mixed picture. We've seen a widening gap between the winners and the losers, the high performers and the low performers. And I'll get into some of the differences between these groups in a little bit. But one thing that we found that was universal across both of those groups is that they're really still struggling with operational fundamentals. Cost is a big one. They're all having a very difficult time managing their cost. But they are cautiously optimistic. They're still rather risk averse. They're thinking that they will be a little bit more opportunistic in the near future, but I think a lot of SMEs are still waiting for those more positive, definite signs of economic recovery before they really move forward with their own plans. Now, as every business owner knows, the first step to managing risk is identifying the key threats. So we asked our survey respondents what they felt were the key threats to their business. They all said that they operate in a high-risk environment. They see threats from all sides: the market, the operating environment, and finances, and all of this is squeezing them while the risk environment seems kind of relentlessly unstable. Unsurprisingly, economic stagnation was the top threat to our SMEs, chosen by over half of them, and that was actually an increase from 2 years ago, where they said 2 years ago just 44% would have cited that as the top threat. Now, I've got a quote here from Professor Stephen Roper, who is talking about the effect of this long-term volatility. He says that there's an attrition effect, that SMEs inevitably get worn down, not just their resources, but also morale. The psychological effect is very important for some. Even if you feel your business is resilient, it is at this point that you ask yourself if you have the drive to invest for the future. The second biggest threat, as I mentioned just a minute ago, is containing operating cost. These costs have increased significantly in the past 2 years. We've all seen things about rising energy prices and other inputs. And it's been the most difficult financial metric for our SMEs to manage. Over a third of them, of those surveyed, see these challenges as one of the greatest threats to their business, which is up from a quarter 2 years ago. And rounding out the top three, insufficient cash reserves. These are a major constraint on SMEs, as increasing financial resilience is critical to withstanding unanticipated risk, long-term stagnation, and perhaps most importantly, a return to growth. I think we've all read about large companies who have been building these massive stockpiles of cash and sitting on them, concerned why aren't they investing? But with SMEs, most of them just have really been unable to build the same kind of reserves. They're cash constrained, and they haven't been able to do it. Our concern is that by having low reserves, they're really kind of teetering on the edge. They are vulnerable to shocks. They don't have the cushion to withstand. So risks that perhaps they could have managed with a little bit of cash reserves could in fact wipe out the business. So we see that as one of the key threats to SMEs. Now, to find out how SMEs are adapting to these challenges, how it's affecting their financial performance, we asked them about a range of financial metrics. As you can see in the positive column, it's really only paying down debt. SMEs have done a pretty good job of doing that. However, they're still having, trouble across the board with the other metrics. In fact, 85% of the SMEs that we surveyed have seen shrinking or flat profit margins, cash flows, reserves, and investments over the last 2 years. Margins and operating costs have also been difficult to manage, owing to external factors like high energy cost, anaemic growth, the Eurozone crisis, consumers' focus on price, and the growing shift towards online channels, among other factors. Business operating costs is the one area where all of the SMEs of those two categories, the high and low performers both, have really struggled to manage. We did see a divergence between those two groups, negative pretty much for all of the categories for the low performers, with the exception of debt. As I said, they all did quite well with paying down debt, but quite a dramatically different picture for the high performers. Now, how we defined these groups, we had asked them about their confidence over the next 12 months and then also over 1 to 2 years. And the high performers were the ones that said that they were confident over both of those time periods. We took confidence as a proxy for performance. And I think the financial metrics do bear that out. They're doing better across the board than the other category. We then looked at the changes that SMEs are making in order to adapt to the economic environment and to those quite difficult financial metrics that we just saw. The main strategy that we found has been diversification, mainly of products and services, but also of customer base and market presence. Diversification of products and services has been undertaken by about 2/3 of SMEs if you exclude the sole trader category. Diversification was also very important for sole traders, but just not quite as many in that area. If you look at SMEs of 10 employees or more, that's where you see a really strong growth in the diversification of customer base and market presence. Now, clearly, diversification can be a good thing. It widens revenue opportunities and might reduce turnover risk. But it can stretch SMEs operationally or strategically, as well as introducing new business risk. I think it's really important for businesses and for those like you who help SMEs to assess their risk, to recognize and address the potential fresh liabilities that come about from changing products, services, or markets. Now, we feel that the scale of the transformation that we've seen with these adaptations, it indicates that SMEs have fundamentally shifted towards a more strategic, diverse, and operationally flexible business model for the long term. We're seeing changes in SMEs that we typically see in much larger businesses. Now, as with the divergence of financial metrics between the high and the low performing groups, we also found differences in strategies between these groups in terms of the adaptations that they're making. The high performing SMEs have tended towards more strategic adaptations, such as improving productivity, which we feel will have more of a long-term impact. The high performers clearly hold a more strategic underlying perspective, enabling them to execute tactics that will strengthen their operational and financial strength for the future. They tend to do things like negotiate lower prices with suppliers and increase the use of part-time or contract workers. We did find that really it was only about 11% of SMEs have shed jobs, but it was the high performers who are much less likely to do so. Broadly, the high-performing group has continued to invest in their business, to invest for the future, building a competitive advantage, we feel, to the detriment of the low performers. However, those high performers do need to be aware that the adaptations that they're making may introduce new risks to their businesses. Any operational change can lead to a shift in risk profile, and that needs to be assessed. For example, as was mentioned earlier, we've done other research, another report looking at the changing technology landscape, and while we did find that high performers are likely to introduce new IT, it might help lead to increased productivity, help them access new markets. Clearly, this can also introduce new risk, and that's something that we feel that they really need to be aware of. Now, in contrast to those high performers, the lower performing group, they tend to opt for a more short-term and reactive tactical approach, electing to make changes such as working longer hours, which has been an important strategy for both groups, but really the dominant strategy for the low performers. They're inclined to take more short-term measures, such as cutting or freezing wages, delaying investments, and reducing credit to customers, much more so than that high-performing group. We're concerned that the low performers might be undercutting their long-term performance and sustainability by failing to invest. They're prioritizing temporary gains, and they're just continuously operating on this short-term pre-crisis horizons that once characterized the majority of SMEs. Now, as with the risk introduced to the high-performing group by adapting, here the risk is of delayed investment, of not making any changes. We're concerned that by sweating their assets, They are potentially increasing operational risk, as for example, machinery or property ages, it kind of increases the chances of something going wrong there. They may also, because of cost cutting, be underinsured, which means that they're not prepared for those risks when they happen. Now, we also wanted to find out how this changing landscape is affecting how SMEs think about risk, and if this has changed their approach to business strategy. We did find that SMEs are increasing their investment of time and resources in the management approach to business risk. They're doing more continuity planning and longer-term financial planning, including building and maintaining reserves and managing debt. This shift, however, towards a more strategic view, while hugely positive for the long-term resilience and sustainability of UK SMEs and the SME economy, it's I think, started from a tendency towards caution. Obviously, they've been operating in a tough environment for a few years now. This caution is becoming quite ingrained in them. Under this prolonged stress, their behavior, we believe, might have actually changed a bit more permanently. SMEs have to look harder at what they are doing and be more explicit, discerning, and strategic about how they approach risk. Now, in terms of risk appetite, the survey respondents really didn't describe their risk appetite today as significantly different from 2 years ago. Obviously, 2 years ago, we were in recession, really couldn't see the way out. A hopefully more positive environment today, yet that risk appetite has not shifted. SMEs feel that they will be significantly more opportunistic 2 years from now. But I think there is still a sense of waiting to see that we're over the worst of it. They're still looking for those kind of definite signs that the economy is improving in order to start taking on more risk. Growing confidence in the near term also reflects two underlying factors brought in response to the past 5 years of challenging economic conditions, and that is better preparation. They have put their houses in order for the most part. They might still be struggling, but they've done more of an assessment of their financial metrics, of where they stand, and by having a plan, I think there's a bit more confidence that they will be able to withstand the continuing stagnation. So what should SMEs take away from this? We feel that strategic adaptation is the best approach to managing the risk of economic volatility and laying a strong foundation for the future. SMEs, some by design, others by necessity, have done just that after 5 years of economic stagnation. They are taking a longer-term view on business strategy and financial planning, deleveraging, diversifying, becoming more agile, working harder, and working smarter, more like the strategies employed by those medium to large businesses. They're building confidence despite a tough risk environment that's unlikely to return to pre-2008 norms, but they need to be aware of the new risks that they might be introducing with their adaptations. The concern really is that that notable conservatism that we just talked about. It raises tough questions about the long-term strength and growth prospects for UK SMEs. The past 5 years have really put the squeeze on SMEs, and many don't have the reserves of cash, resources, morale, and other mechanisms, nor perhaps the full awareness of the cost burdens that they're going to face in order to tackle ongoing stagnation or volatility. A business that has low reserves will be hit harder when something goes wrong. We've seen in the press talk about zombie companies. Those are just kind of teetering on the edge, hanging in there because banks don't really want to pull their funding and realize a loss, but they're not in a position to grow. And we really feel that this is going to have a long-term impact on the wider UK economy, because SMEs play such a vital role within the economy. We do feel that there is a return to growth coming soon, hopefully soon. We do have fundamentally stronger SMEs with those high-performing category. I think the overall shift to having more of a focus on strategy, more concern about risk management, these changes can only be better for SMEs in the long run. Now, the full report, you all have a copy there. As mentioned, we have 2 other reports focusing on the changing technology landscape and changing demographics and the effects of those. I'm going to play you just a short video that's going to give you a little bit of a teaser to some of the data coming out from those other 2 categories.
New dynamics are underway in the UK SME sector, changing the risk horizon for small businesses and the SME economy. Under the impact of the economic crisis, British SMEs have made long-term adaptations, such as diversification of products and services and improved productivity. Those performing less well have made short-term changes, such as working longer hours and reducing prices for customers. Technology is increasingly a basic requirement for SME performance, but many still underestimate threats posed by teleworking and mobile workforces and social media reputational risk. In addition, the demographic time bomb has implications for the growth prospects of SMEs and the wider economy. Only 40% of UK SME baby boomer owners are currently dealing with their retirement. Limited prospective buyers and access to capital and a capital-light generation may hinder the regeneration of SMEs. Download the full reports developed by the Economist Intelligence Unit for Zurich.
Okay. Thank you.
Well, thank you, Monica, and indeed Richard beforehand. So I think what we'd like to do now, because it's really your opportunity, I guess, to ask questions of our presenters. So could I first of all invite Russell Corborg-Warren, Head of SME Underwriting at Zurich, to join our presenters, and indeed Richard as well, back onto the stage. And they will be pleased to sort of answer your questions, or at least I think Russell will anyway. It sounds like he's going to get the lion's share. I think we have a roving microphone in the room, so if you could just sort of raise your hand, then obviously we'll get the microphone to you. So there's a question down here to start.
This is really for Monica, actually. One of the parts of the survey was asking about the problems facing SMEs, and access to capital seemed to have deteriorated from 2 years ago to today, yet the banks are consistently saying we've got loads of money to lend. Yeah. What's the reality?
I'm seeing really mixed messages there. Like you said, banks on one hand are saying it's not us, the money's there, we're just not seeing the demand from SMEs. While clearly a lot of SMEs are saying they're having a hard time getting access to funding. I think that the money is there for the SMEs that banks want to lend to, perhaps the larger end of the SMEs, and those with a longer history. I think it's probably the smaller end, the newer companies that are really struggling to get financing. But yeah, good question. Really mixed messages on the funding side of things.
I think, if I can come in, I think that's true as well. We run a couple of panel debates around each of these reports, and some of the guys at the CBI and the FSB were pointing to education actually as part of that funding process. That the business, the funding is there for people that can put forward the proposition correctly. So even some of the smaller businesses that may not have a track record, if they could put forward that proposition the right kind of way, they might get access to funding. Or indeed, they were talking about trying to create greater education around alternative sources of finance. Mike Kapoor from the CBI was saying actually he went into a business, just helped them look at where their major cash flow issues were, which is around one large supplier, renegotiated terms and freed up quite a large amount of working capital, which then A, helped them reinvest, and B, made them look much better as a prospect to lend to.
I do think education is important. I think a lot of SMEs, by seeing the news reports about funding drying up, perhaps aren't even seeking it. So it is a bit of a chilling effect that they're not looking for it because they don't think it's out there, even though it might be out there for them.
Any other questions? This one just there. Thank you.
Richard, it's really a question for you. At the outset, you said this was a sector that you felt Zurich wanted to grow in and develop, but having heard the fairly bleak and dismal outlook for SMEs, I just wonder what makes you feel in that way. What do you see as the positives and the attraction of this sector?
So for starters, it's a very large part of the economy. I think we mentioned it's 99% of UK companies, and if you look at the UK commercial insurance market, it's about half of the UK commercial insurance market. So substantial sector and very, very diverse. In terms of why we particularly want to grow into it strategically, it's an area that we're not particularly strong on, so it's an opportunity for us to very much to grow. And I think there are really positive signs in this report. So we see the kind of the downsides of economic stagnation and other issues, but you've got 60% falling into that high-performing category, and that 60% are starting to think much more strategically about risk. So 53% of them would say they are now thinking strategically about risk in a way that they never have done before. So there are the signs that the economy itself is going to tip over into some growth, but also that the businesses that are coming out are probably more strategically resilient, probably have a greater appreciation of what we as an industry have to offer them than perhaps they did pre-crisis as well.
I think on behalf of the brokers, maybe I could sort of say one of the problems that I think brokers have been seeing is that there has been a very big shift, I think, towards small businesses looking to cut back on insurance costs, maybe looking to remove certain parts of protection like business interruption perhaps, very much false economy. I think we would all accept that. But I just wonder whether there are any other sort of positive steps that maybe as an industry or particularly as insurers that we can do to help brokers to try and sort of get that message out there to businesses to make sure that they do insure for the right values.
I think so. If we go back to some of these panel debates we've had, there was an SME there that spoke glowingly actually of his insurance broker. In a way that he changed insurance brokers and looked to lay off a large amount of his risk and liability. He provided cloud computing, so he thought strategically about where do his risks lie, talked to his broker, and it was a fabulous story for us as an industry. I think what we're not good at is telling those kind of stories broadly, and probably just publicising the value of what we do. We talked a lot after the event around some of the good things we do in terms of case studies and how we get SMEs back up on their feet quickly. Very obvious and simple things, but I don't think we make enough of them. So it's a bit of a hoary old chestnut, but I think we need to shout more about what we do well.
Yeah. And I think one of the things, from the research as well, is about how SMEs are now more open to talking about risk. I was talking to one of the brokers today about just a small high street shop that was wanting to get finance, and the bank wanted a business continuity plan for a risk that was paying £500. They wanted a proper business continuity plan. And so that there's such a more openness to actually understanding the real impact of some of the risks that they face and what the impact is of removing business interruption, especially as we see the capital reserves are dwindling.
Sure.
So I think some of them see it as an easy short-term decision to take, but there is a far more openness now for you guys to really bring an open, a real good debate about the actual risks that they're facing. It's their openness to actually discuss the risks they're facing seems a lot higher now.
Any other points from anyone? Okay, well, if there isn't, then I think, once again, ladies and gentlemen, thank you both to Richard, to Monica, and indeed to Russell, and perhaps we could show our appreciation for their presentation.